Welcome to the full course of First Home Buyers Essential. I really hope that you got a lot out of Module 1, which was our overview module. Hi, I'm Greg Watson from Home Finance Hub, and I've designed this 8-module course to provide you with the benefit of our experience as home buyers and with 3 decades of experience in the finance field. Welcome to Module 2. So firstly, we do have our disclaimers that we have to run through, and first of all, this is general advice. The information contained in this course is general in nature and does not take into account your personal situation. You should consider whether the information is appropriate to your needs and, where appropriate, seek specific professional advice from an appropriate professional. Secondly, taxation, financial, legal and other matters referred to are of a general nature only and are based on Home Finance Hub's interpretations of laws existing at the time and should not be relied upon in place of appropriate professional advice. Those laws may change from time to time. Incidentally, appropriate financial advice or appropriate credit advice is something that I can certainly provide. Thirdly, I am an authorised representative of Blesser Proprietary Limited and a mortgage advisor accredited with the Mortgage and Finance Association of Australia. So, Module 2 is all about which home is for you. And what we're going to cover in this module are the types of property that you could look at as a first home buyer. We're also going to look at the costs of buying and owning a home, which is really important to know because there's certainly costs involved in buying, but there's also costs in holding and living in a place that you wouldn't necessarily have if you're renting or living at home. Thirdly, we're going to look at the concept of buying or building, and there are pros and cons around both of those ideas. And fourthly, we're going to look at first home buyer benefits. So there are quite a number of benefits available to first home buyers right around Australia. And depending on which state you're in, they vary. But we're going to walk through some of those as well, so that you've got a grounding in all of that stuff. So that's where we're up to. So next, we're going to talk about types of property. So there's 3 or 4 different things that we want to look at. But of course, look at these different types. There's a house, or there's an apartment, or there's a townhouse, or there's a duplex. There are many different types of property that you could choose. Obviously, you're going to choose something that fits your lifestyle, or it's going to fit your affordability bracket as well. What sort of property is it? That's what we've just talked about. What inclusions does it have? Look, we did provide a home purchase checklist in the first module, so I'm going to encourage you to check that out. Again, it covers a load of things that you should consider around the inclusions of a property, but really what sort of place you want to live in and what features and characteristics does it have. And also, are you looking for your needs now, or are you looking into the future? You sort of forward casting your life to go, is the property that you're buying now something just for now, or is it something that's going to suit as you maybe grow your family, or maybe the property has the ability to be expanded, let's say extended if it's a house, for example. So think about those as part of the process of considering what property is right for you. And then also looking at affordability and growth. So if you're looking about property as affordability, you're buying where you can afford to buy, but you're looking into a property that's going to be, has a prospects for gentrification in a certain area and capital growth. Because my view on your first home is that you should consider it as an investment. Really, it's usually a stepping stone into the property market to get started, to get that toehold in the market and just get you started. It's usually a start rather than a forever home. That might not be the case, but just suggesting that if that is the case for you, then you should certainly consider how that's appropriate for you in deciding what sort of home you want to buy. So we talked about the costs of buying and owning a home. So firstly, we're going to look at the purchase costs. And really the most important cost, or the largest cost in buying a home, is stamp duty. It's the most significant of fees, but it's often reduced for first home buyers if you stay within state limits. So what stamp duty is, it's a fee charged by the state governments for the transfer of title from one person to another. However, for first home buyers, there are exemptions up to certain property value limits. So those will be covered a bit further on when we're looking at first home buyer benefits, but useful to know. Another fee that you'll that you will come across during the process is legal fees, because you have to pay for a solicitor or a conveyancer to assist you with the completion of the transaction in most cases. Thirdly, there are lender fees, so there will be fees like maybe application fees or valuation fees. It does vary from lender to lender. Sometimes you won't have any fees, but usually there is some type of fee associated with lending, and there may be a broker fee involved depending on who you're dealing with as well. There'll also be building and pest inspection fees. So if you're looking at protecting your property, and we certainly hope that that's going to be the case, that you'll have costs for having building and pest inspections done. Not finally, but you'll also have removalist costs, because if you're moving from one house to another, normally there would be a cost associated with you doing that. And whether that's actually employing a removalist or if it's getting a couple of mates with a ute, because we've certainly done that before too, that's another way that you can perhaps reduce those costs, but there's something there nonetheless. And finally, there's adjustment with rates. So when you finalise a transaction, usually the rates are paid up to a certain date. These are the council rates that I'm talking about. Those rates are paid up to a certain date, and if they're paid in advance, then there will be an adjustment payable back to the vendor, and that's part of the adjustment process that's finalised at the settlement of your property. So that's what we're looking at for purchase costs. In terms of the costs of buying and owning a house, in terms of the ongoing costs at least, there are numerous costs to owning your own property that you don't necessarily have when you're renting or you're living at home. Weigh this up when you do your numbers, but where interest rates are at these days, in many parts of Australia, it may well be less expensive to buy than to rent. It's probably never going to be cheaper than living at home, but certainly if you're renting, then the costs of buying an equivalent property may be less in the current circumstances with interest rates as low as they are. Of course, that's probably not going to always be the case, but that's certainly the case right now at the end of 2019. So some of the costs that you'll have on an ongoing basis will be council and related costs. So there's going to be land rates which are payable to the council. You either pay those on a quarterly or an annual basis. There's sewage and garbage fees, and there's water rates. So they're basic fees for most properties. Then you'll have, say, for an apartment or maybe a townhouse, you may have strata levies if it's a strata title building or a collection of dwellings. There may be strata levies for that, for maintenance and grounds and so on. Then, of course, you'll have utilities, because you'll have electricity, at least electricity. Maybe you'll have gas as well. And in that, I would also put your phone, if you have a fixed phone line. Certainly, internet requirements I consider as a utility now, because we use them every single day. But the other things that you'll need to consider as part of the ongoing costs will be things like repairs and maintenance, because certainly for older houses, there's more in terms of repair and maintenance, but you might have appliances that need to be replaced, or you might have painting that needs to be done, or carpets that need to be replaced, or indeed you might take it further and want to do renovations. So again, that's a different conversation, but it's still part of those costs about owning a house that you wouldn't normally have if you were just renting. So most of those you would, apart from utilities, you wouldn't pay generally when you're renting a property. So there are a few reasons to consider building that could be both financial and personal benefits, because there's something about having your own home that you've built it to your requirements, to your family specifications, to your needs, and it's new. So that's kind of cool. So one of the things that needs to be considered from a financial perspective is stamp duty. If you're a first home buyer, normally if you're doing a buy a property, land, and build, you're not going to be paying any stamp duty at all, because normally that will be covered by the state government concessions. But it's something to consider in other circumstances. For example, if you've got one party who's a first home buyer and the others not, well, you don't get those first home buyer benefits, but stamp duty is reduced because it's only on the amount of value of the land, not the total construction. So if you buy a house a block of land for $300,000 and put a $400,000 house on it, so the total value of the the project 700,000, you're actually only paying stamp duty on the first 300,000, which is the land value alone. So that's worth considering if you're in that situation. Usually for a first home buyer, your stamp duty on a land purchase is going to be negligible, if anything. Additional benefits to consider are also there may be first home buyer or first building benefits that some states have. So there may be $10,000 benefits in some states for you to build a new home, and that again that varies from state to state. And there's, as I say, there is something about having a new home. It's it's new, it's bright, it's shiny, but things don't tend to go wrong because you have an insurance from the builder for the first 7 years. So there's if there's any structural defects or if there's any problems or concerns, you've got recourse back to the builder on the basis of having a new home. And it could be that you're building your dream home. You're building all of the things that you want in your home that you've considered a part of your lifestyle requirements now and into the future. It's definitely a higher cost. It's a higher cost way of buying a property because building something new, there's always profit built in for the builder, and there's always higher cost with buying stuff new rather than something that's already got some depreciation built into it. To be fair, for some first home buyers, this can really be a stretch because it's an extra financial stretch to go that bit further to be able to buy that first home as a new home rather than buying an existing property. So that's really something that's worth considering as part of your process in considering what sort of home you're going to buy. First home buyer benefits. Wow, there's stacks of things to talk about here. So what I want you to do is I would really want you to refer to the first home buyer's benefit matrix that's included in your resources for this module. It's got a summary of benefits available to first home buyers and links to all the state bodies for more information. So depending which state you're in, all the information should be there, and there's certainly links to the state governments around the country, and there's specific programs that they have for first home buyers in their state. So there's stamp duty exemptions basically across the board in most states for first home buyers, and those exemptions go up to a certain asset threshold. So I'll give you an example. For New South Wales, that threshold is $650,000. So a first home buyer buying a property up to the value and including $650,000 doesn't pay any stamp duty at all. And then there's a reducing benefit up from $650,000 to $800,000, and that's takes into account the fact that if you're in Sydney, $650,000 might buy you a unit in an outlying suburb. But if you've been waiting for longer and you've got some more resources, you might be looking at something that's a little bit more expensive than that minimum benchmark. So as I say, those things do vary from state to state, those exemptions and the thresholds, because properties are different values in different places. So the other things that you need to consider, and we did just talk about this, is there's building bonuses in a number of states. If you are looking to build your first home rather than buying an existing property, you need to look into the building bonuses. Again, those are on the benefit matrix that is provided as the resources for this module. And there's the first home loan deposit scheme. This is something that is really, really important because it's really, really new. So the federal government has only just announced this. That was in the last election promises. And it comes into effect from the 1st of January 2020. So we're on the cusp of this happening right now. So what's going to happen is that 10,000 first home buyers will get the benefit of this each year. There's only going to be 4 banks, I believe, that are involved in the process. There's going to be 2 major banks and 2 second tier or other lenders. We know that one of them is National Australia Bank. So far, we've not heard any other releases as yet, but I will update this module as I know more about that, and certainly we'll have a release coming out to people as we know more information. So how this is going to work is that up to 80% loan to valuation ratio, which means that you borrow 80% of the value of the property. Up to 80%, there's no mortgage insurance involved generally. So, but between 80 and 95%, there's thing called lender's mortgage insurance, which I will cover in the insurance module, which is a little bit down the track. But just to give you an idea, it's basically a fee that the lenders charge to protect themselves because there's less equity in the property and there's less margin for error. So that occurs between 80, well, anything above 80%. So what the federal government is doing is they're ensuring the gap between 80 and 95%. So a first home buyer can come into the market with 5% deposit and be able to buy their property and not have to suffer the cost of mortgage insurance as well, which is generally added on top of the loan. So again, we don't know all of the ins and outs about how this is going to work, but we do know that it will be available from the 1st of January, and there will be 4 lenders that will be available, and it'll be run through the broker network as well. So we'll certainly be able to assist you, A, to find out more information, and B, to be able to execute those things for you. So that's an exciting prospect that's coming ahead. It is 10,000 first home buyers only, which is a chunk of the market. So it will be important to get in early on that. So we're looking to be up and running early in the new year to be able to assist people in that area. So I'd like to just go through the summary of learnings that we've done in this module so far. And what we've looked at is we've looked at types of property. We've looked at the inclusions in those properties and what you're looking for as part of your lifestyle, as part of your desire in your new home, what sort of home it is. We've looked at affordability and growth. So we've looked at, what area are you buying? Are you buying it because you can afford it, or are you looking for a future growth potential in that area to give you another stepping stone back into the market at a higher level? And I put forward the notion that your first home really is an investment. As I said, it really is a stepping stone. So it's something that gives you a leg up to get into the market, and then you can leverage off that later on to give you more excitement, really. But the whole idea with an investment is really you should take the emotion out of it. So if you can take the emotion out of a purchase and purchase based on the fact that you've got a set criteria that you want to achieve and a set financial objectives that you wish to achieve, then taking the emotion out of it allows you to achieve those, because it is just a stepping stone in most cases. So the costs of buying your own home, buying and owning a home, we have looked at the significant buying costs, but they're reduced by government subsidies. And we've looked at stamp duty particularly, because that is the major cost of buying a home. And there are certainly expenses after you've bought that you need to be aware of. So we've provided a whole list of those. And we've looked at that it's cheaper to buy in some areas than to rent right now. And that's really going to be an important thing to consider as you make the financial decisions around what home is right for you and how you structure your finances. So as we continue on this summary of learnings, we've looked at buy versus build as well, and we've looked at first home buyer benefits. The buy versus build conversation is often driven by lifestyle choice. It can also be driven by your financial resources too, because it generally is a little bit more expensive to build a new home than to buy an existing one. Some of the costs are lower from entry cost point of view, so there's less stamp duty, which generally doesn't affect first home buyers, as I said during the module. So some of those costs are lower, but of course at the end the whole cost may be higher. And there are grants in some states to cover some of those building costs, but you do get bonuses in various states. Please check the benefit matrix, which you'll see attached to this module. Overall costs are generally higher. I did say that. So with respect to first home buyer benefits, the matrix that we've created is quite complex. Is quite comprehensive, and it does have a lot of information in it, which you can refer to, as well as references to each of the state government sites that have their particular information around that. There are stamp duty reductions and exemptions in most states, and you'll have that information there. If you've got any questions about that, please get in touch, because we can assist you in navigating that as well. There are building grants in some states, which I did mention earlier, and there's the first home loan deposit scheme, which starts from the 1st of January 2020. So that's the end of Module 2. Thanks for joining us again, and now you like these guys, you're another step closer to your dream of owning your first home.